Canadians are taxed to death. It's no surprise to anyone who's Canadian if you've filled out your income taxes, whether you're a small business, a sole proprietor, or whether you're not, you just have like a T4 and you're getting a paycheck and all the deductibles come straight off of it. If you do the math, you'll realize that we are taxed to death. It feels like we are getting new taxes in any form. Every year there's a new tax that comes up and we're going to pay for it some way, whether it's through the cost of living, through inflation, or through just your own income tax form. It's brutal out there, guys, and honestly, 2025 is not shaping up to be any better than 2024 for Canadians and their taxes.
New year, more federal tax hikes from Prime Minister Justin Trudeau in 2025. Payroll taxes up, carbon taxes up, alcohol taxes, you guessed it, also going up. So the payroll taxes in 2025 will increase by up to $403. So let's say you're a worker making $81,200 or more next year. Well, your total payroll tax bill in 2025 will be about $5,500. Your employer will also have to fork up $5,900. So Trudeau taking more money out of your pocket again in 2025. Carbon tax also going up. Trudeau is yet again cranking up his favorite tax on April 1 of 2025. On April 1, the carbon tax will cost about 21 cents per liter of gasoline, 25 cents per liter of diesel, and 18 cents per cubic meter of natural gas. And before the government starts shrieking, what about the rebates? What about the rebates? Well, the Parliamentary Budget Officer, the government's own independent budget watchdog, has once again shown that the carbon tax is costing average families hundreds of dollars more than they get back in rebates. In fact, the carbon tax will cost the average family up to $477 more in 2025 than they get back in rebates. And some more bad news, the government also charges its sales tax on top of the carbon tax. So this carbon tax on tax will cost Canadians about $500 million next year, and the government doesn't even pretend to rebate that carbon tax on tax money back to you. Now, the carbon tax can sure drive you to drink, but oh, too bad. Trudeau will be making alcohol more expensive again in 2025 with another alcohol tax hike of 2% on April 1. So that tax hike will cost taxpayers about $40 million next year. And remember, folks, in Budget 2017, Trudeau imposed an automatic alcohol escalator tax that increases taxes on alcohol every single year without a vote in Parliament.
Come on, just let us drink. Just let us drink. If the cost of living's so bad, we just need a little bit of something to, up our spirits. Like spirits are taxed now. So now we have low spirits. My God, it's thank God I actually cut down on my alcohol. I'm trying to get as dry as I can right now. It's part of the New Year's resolution, but even before that I was drinking a lot less. So, at least that's kind of got me in an area where maybe I'm in a positive for this, but I still think it's brutal. If you're someone who likes to drink and you're going to have to pay those extra taxes, it's going to affect you a lot because, you got all the other taxes, the taxes on taxes on taxes here in Canada that is going to come right out of your pocket.
I had to dig high and low for this fucking number, and I finally found it. How much money did Canadians pay in income tax in 2023? The answer is $348 billion. Now let's combine the PST, GST, all that bullshit. $422 billion in 2023. Where the fuck is our money? Tell me, what do you guys think?
And also, you have to remember Canada's population is around 40 million? So that's all income tax from 40 million individuals. What is going on? That is insane tax per person.
So we've reached it. Max taxation. What is it? Well, it's called the Laffer curve. This shows at the top of it, right there, that any more taxation, the economic benefit goes down. So we've hit that in Canada. In Canada, we are taxed to death. We are taxed at a rate which is nominally about 12% higher than Americans on every dollar in our society, which is crazy when you talk about, and that's just national averages. And we make $25,000 less per capita on average. So we have decimated the complete economy of Canada. Unemployment rate is now on the way up. Rates are going to drop fast. And if you're wondering how fast, my theory is about 1.5% will be the overnight rate as of July. It's just, my forecast. But hey, let's see.
Yeah, and we're a lot poorer per person than the United States, which is even more insane. The fact that we're getting taxed 12% more per individual in the United States. What is going on? This is crazy. And then on top of that, the forecast of 1.5%, yikes, good luck. Yeah, you're not going to get a lot of GIC benefit there. Trying to save that money, you might as well just throw it into the stock market, and don't choose Canadian companies, American companies, because whenever I put my money into Canadian companies, unless it's a bank, holy crap, it just goes down. So yeah, maybe get some nice S&P if you have money to throw aside. If you do, I mean, we're pretty broke here in Canada, but if you have any money, probably throw into the S&P 500. That's my advice to you. But again, I'm not a financial advisor. Don't take this as like legit advice. That's just what I'm probably going to do.
It appears that the government of Canada is trying to trick Canadians into giving up a portion of their primary residence exemption in exchange for a small tax credit today. Check this out. In 2023, the CRA rolled out the multi-generational housing tax credit, which incentivizes Canadians to build an additional unit onto their home to house their elderly parents or a disabled family member. This sounds like a great thing because it increases density and it incentivizes taking care of elderly parents. And the way that they've structured this is that if you do add this second unit, you can claim a tax credit. The tax credit is valued at $50,000 with a refund rate of 15%, meaning you'd get $7,500 back in your pocket in form of tax refunds if you were to claim this credit. The trick, though, is that if you do this, then the CRA has just acknowledged, thanks to Rudy Manzetta's deep dive into this from the Globe and Mail, that you will lose your primary residence exemption on the square footage of that second unit. So let's say this second unit makes up 30% of your house in terms of square footage, and you see a $100,000 capital gain. Well, all of a sudden, you have now wiped out your tax credit that you've received today because that $30,000 taxable capital gain will wipe out the $7,500 tax refund that you get. Now, we all know that adding rental properties to a primary residence automatically excludes that portion of the property from being claimed as a primary residence, and that makes sense. But this isn't a rental property. That's not what this is. It's not like your elderly parents are required to pay rent. And if you just have your elderly parents move into your primary residence, you don't exclude your primary residence exemption for that. So the government is trying to pull a dirty trick on Canadians by getting them to give up a portion of their primary residence exemption in exchange for a small tax credit today. It's just another way that the government is pulling the wool over the eyes of Canadians and trying to get them to pay more taxes over the long term.
Yeah, if you are looking to do that, definitely talk to an accountant before, because there's going to be a lot of sneaky little taxes that you don't even know about, and then you might have to pay up the ass later on. So definitely do your due diligence on that, because yeah, selling and the capital gains, even if you think you're tax exempt on certain purchases or sales, you're going to have to talk to an accountant. Like seriously, anytime you're going to sell anything in Canada, talk to an accountant, because you don't want things to get misconstrued. And here is the final video here on why Canada sucks for taxes.
Canada sucks, let me explain. So it's usually this time of the year where I start to realize how bad Canada actually is. I just paid my taxes for the year, which I had to pay mid six figures, which I already knew Canada has one of the highest tax rates in the world, which is completely fine. I understand that. But not only that, you have taxes for things like I bought this car and I had to pay luxury tax. I bought my Ferrari 488, I had to pay luxury tax on that. On top of that, there's no incentives for business owners, entrepreneurs. Real estate prices are through the roof. The average income is still the exact same. There's no minimum wage jobs. Unemployment numbers are at all-time highs. Like there's literally no benefit right now of staying in Canada, in my opinion. If you're someone that has big goals or you're starting to make money, a lot of my friends have already moved out to like Miami and Texas where the tax rates are super low. But right now, there's really not that many benefits of living in Canada. In the next 4 years, I really don't see much changing.
Yeah, and it's good advice, but it's really tough for people who aren't making a lot of money if they're not, if they don't own their own business. You know, if you don't have the skills to get a job in the States, to be, you know, hired there as well by a recruiter, it's not great advice. Unfortunately, if you're in Canada, you're pretty much stuck in Canada unless something, you know, happens that really changes your future, whether you get a really good job or anything like that, that is transferable to the States. But regardless, yeah, it's not looking good for Canada, and just in general, Canadian taxes are through the roof here in Canada. There's no question we are taxed to death. See you guys in the next video.